Let's begin by talking about the markets. For the second week in a row, the Nifty has ended in the red, which means it's down close to half a percentage point. It's gone below 19,600. In fact, 28 of the 50 constituents of the Nifty have closed in the red. And Hero MotoCorp and Apollo, the top drags on the index. But sectorally, we've seen the IT sector turn out to be the gainer, the top gainer, led by the likes of Tech Mahindra and L&T Tech. Pharma also managing to hit that record high this week. Realty, of course, has been the top loser. And FMCG, PSU banks and private banks have ended the week in the red as well. Let's find out where things stand. Our research team is here to walk us through all the highlights of the week gone by and what we should be watching out for by way of cues. Let me come to you first, Harsh. Tell us about the week gone by and where we've kind of wrapped up trade for the week.
Yes, the focus, Vikram, during the week was largely with regard to the way in which Fitch downgraded the U.S. Treasury. And essentially what they did was they sent markets into a bit of a tailspin, if I can call it. And that led to a second consecutive week of declines for the Nifty, down around 0.7% or thereabouts. And, in terms of the top losers itself, we saw, the likes of the Hero MotoCorp down 7%, Apollo Hospitals also matching that. SBI on the back of results was also down 6.8% for the week. You saw Bajaj Finserv and a Power Grid both lose 6 and 4% respectively during the week. Among the gainers, of course, was Tech Mahindra, and the IT pack, as you will notice, are really the top gainers. Tech Mahindra gained nearly 8%. HCL Tech was up nearly 4%. NTPC also up nearly 4%. You had the likes of an Adani Enterprise and a Coal India also up roughly 3% during the week. So those were a list of the top gainers. With regard to sectors, and let me switch that, IT Pharma and Nifty Pharma and Nifty IT were probably the only two gainers with regard to sectoral indices. We saw Nifty IT up 3% and Nifty Pharma up nearly 2% for the week. In fact, Nifty Pharma hit its all-time high as well. So on the back of that, we had Pharma index in focus. But among the losers were the Nifty Realty down 4%, the Nifty PSU Bank also down around 4%. We had Nifty FMCG down nearly 2%, Nifty Auto down 1.5 odd. So those were largely the other ones in focus. Back to you, Vikram.
Very much for that. And of course, Sharad is standing by to tell us about the kind of demat account additions that we've seen in the month of July. How did we do on that count, Sharad?
Well, yes, in focus, we'll be having the demat account additions, and they have come in at their 18-month high levels. Now, for the month of July itself, 30 lakh new demat accounts have been added, and this translates into a 25% month-on-month basis growth. And apart from this, also to remember the retail interest in the market, be it the cash turnovers as well as the future and option turnover, have been coming at nearly record high levels. Apart from this, also the FY23 average demat additions, if you look at it, they stood at actually roughly 21 lakh additional incremental demats coming in every 1 month. So that means there is an increase of roughly 50% in the average demat account additions coming in FY23. Now the question is, what are the main reasons for this important incremental additions of demat happening despite volatility coming in the global markets? The important thing is that the domestic macros for India has remained strong. We are in the middle of the Q1 earnings season, where largely the numbers have been coming on a broader basis on a good inline or better than estimates. Apart from this, also the primary market action that has resumed its buoyancy, and a slew of IPOs are also slated to come next week as well. Apart from this, there's also strong interest coming from the FIs, where they have been pumping more than 80,000 crore rupees over the last 2 months. So we see a lot of important factors driving the rallies in the market. And overall, the retail interest is still intact.
The retail interest is intact, and that shows in the kind of demat account additions and the kind of trend that has been building up on the upside. But of course, Sharad, you were talking about the kind of cues that we should watch out for. There are earnings, there's action in the primary markets, there are macro cues both domestically and globally. And for that, let's just understand what we should be watching out for in trade in the week ahead. And for that, Vamakshi is here. Tell us, Vamakshi, what should we be watching out for by way of triggers for the markets?
Well, yes, let's first look at the most important cue for the next week, and that is RBI's MPC rate decision. Other than that, as far as the earnings season is concerned, we will have a whole host of Nifty companies reporting their numbers. We will be watching out for Hindalco, Coal India and Adani Ports on August 8th. On August 10th, keep an eye out on Grasim Industries as well as Hero MotoCorp, and on August 11th, keep an eye out on Apollo Hospitals as well as ONGC. Now, as far as the IPO market is concerned, now it has been a buzz of late, and on August 7th, it is the last day to subscribe to the IPO of SPFC Finance. Yatharth Hospitals is also expected to list on both the exchanges on the same day. Come August 8th, we will be keeping an eye out on Concord Biotech IPO because it happens to be the last day to subscribe to for this. Other than that, we will also see an IPO open for subscription next week, that is TVS Supply Chain Solutions, which will be opening for subscription on August 10th and it will close for subscription on August 14th. As far as some AGMs are concerned, keep an eye out on Tata Motors, L&T, Hero MotoCorp, Tata Steel, HDFC Bank as well as Ultratech and Biocon. They will be holding their AGM, and that is the reason why these counters will also be in focus. Other than that, when we look at some of the economic cues globally, keep an eye out on the US CPI as well as the initial jobless claims data on August 10th. Watch out for India's industrial production data, US PPI, UK industrial production as well as UK GDP data on August 11th. Now, as far as corporate action is concerned, watch out for Ease My Trip on August 7th because they will be considering issuance of equity shares and also considering proposed preferential issue as well. On August 8th, Maruti Suzuki will be considering the mode of consideration for acquisition of nearly 100% stake in Suzuki Motor Gujarat Private Limited. And lastly, keep an eye out on Uno Minda because the company is expected to consider raising of funds via NCDs. So all in all, these were all the important counters as well as the important events that you should watch out for in trade next week.
Lots of cues to watch out for. Vamakshi, thanks very much for that, including Harsh and Sharad for joining us with a view on the markets and what we are seeing by way of moves. But to decode what's happening in the markets, Anurag Singh, managing partner at Ansid Capital, is joining us from Chicago. Anurag, always a pleasure having you with us on the show. Tell us, as my colleagues were speaking about the last 2 weeks or so, the benchmark indices in India, they've touched these fresh highs. And we've seen the Sensex go to unprecedented levels, 67,000. But over the last 2-3 sessions, just before today, we saw some selling pressure start building up in the markets. Now the Nifty is down for the week again. Do you put it down to the weakness in the global markets, Anurag, especially after that Fitch downgrade of the U.S. credit rating that we were talking about? Was it because of some profit booking, perhaps, by FPIs because of these concerns over valuations? What would you say are the prime reasons for the Nifty to do this bit of a U-turn after that gush of higher highs?
Correct. So Vikram, always a pleasure to have discussions with you, and good evening to the viewers who are listening to us. So Vikram, I understand this might perplex the investors in India typically because they would ask a question: if India is doing well, why do we worry about what's happening globally? But I think it's a reality. We should acknowledge that while India's story is great, markets can't grow in isolation. And that's because, Vikram, because almost half of the trading that happens in Indian market is done by, one side of that is the foreign institutional investors. And they react to global cues, global fund flows, and dollar index, price of oil, all of those parameters, right? Of late, we see oil rising up again, which is bad for inflation, especially in US and developed markets. Then, there is a dollar index shows a similar rise as well. And today, Vikram, the wage data has come in again, and wages continue to grow at near 5% in US, which is bad news for inflation. So ultimately, I think the whole hope trade even in Indian markets was that Federal Reserve is probably done. Recession in US will be very shallow, if at all. But looks like that story was a bit too soon, Vikram. And I think we should really, even looking at all these parameters, Vikram, we should acknowledge that markets ultimately need either strong triggers to rise, or they need a very clear runway. And Vikram, I see that none of these exist as of today.
But, Anurag, now that Morgan Stanley has ranked India first as an investment destination among emerging markets, our hopes are building up and hope trade, like you're calling it, as far as the Nifty is concerned. We've seen that show in the rise of about 3% over the last month in July. And we've seen FPI inflows powering that uptick in the benchmark as well. Do you believe these FPI inflows will sustain and drive up the index further? Or do you think valuations in India are going to be a concern for them?
So, Vikram, I think what Morgan Stanley report emphasizes is that India continues to be a very good story, reliable, dependable, and trustworthy story. And why am I saying this, Vikram? Because look at the peer group. I think we discussed the other day as well. Look at how Brazil is doing. Look at how South Africa is doing. Look at Russia. So there is Argentina, Mexico. So I think if you look at all of these economies, I think India comes out as an economy which is growing stably. It has a stable interest rate regime. It has stable macros. Government stability on fiscal prudence is kind of pretty high. So I think all of these factors make for a very robust capital market performance in India. And that reflects in the high valuation in the country. Having said this, and even from these high valuations, look, Vikram, our nominal GDP growth, I'm saying plus inflation, GDP plus inflation is likely to be 12%. Estimates can change, but 12% is a very solid number. So even if nothing happens, the earnings of major companies will continue to grow by 12%. And that's not in today's scenario, that's a phenomenal return anywhere in the world. So Morgan Stanley's overweight outlook is kind of justified. I think that's fair because they're comparing, look where they're comparing in the peer groups, the others are doing even worse. But I think coming to the FII point, Vikram, I think that money is a bit opportunistic. So I think when they come in, we should not take it as a big thumbs up. I mean, that money is, money will chase where the returns are. But I think in case where the oil is rising, usually Indian markets don't do very well. And that coupled with dollar index rising as well, FIIs are bound to pull up money. But that's okay. That should not concern us. All I'm saying is, Vikram, that's not a good backdrop for markets to make. I mean, I understand they've made a new high, but that's not a very convincing high, really, right? So we don't have a very clear runway. And your RBI cannot drop rates until Federal Reserve really changes stance.
Yes.
And that's not happening anytime soon. So those are the conflicts I think we should be aware.
Yes.
And we need to be a little patient, Vikram.
Yes, certainly. Talking of the RBI, and very quickly at that, because it's going to be one of the big triggers in the markets. They are going to announce their next policy move. And the larger consensus is that we are going to maintain status quo. If that is the case, put that against the interest in financial counters that we've seen, whether they are banks or NBFCs. Do you see them continuing to ride the crest of the interest in equity in India's financial pack? Is that going to sustain?
No, so I think they need to take a breather, Vikram. Indian index is financials heavy, and that's okay in a developing economy. Financials take more of the formalization, tailwinds. But I think the banks are very richly valued in India, and I think unless the loan growth really sustains more than 20%, I think they also need to cool down a little bit. I think compared to the global peers, they are very, very richly valued. So I don't see, I mean, it's a good sector. I like it, but the valuations are, as of now, in the medium term, looking a bit too rich. And that's why they've corrected. RBI can't change a stance, Vikram, unless Federal Reserve changes. I have no doubts about it. So ultimately, basically, things are kind of locked up.
Yes, you have maintained that line, Anurag. Thanks very much for joining us with your perspective as always. Pleasure having you with us on India Tonight.
Pleasure always, Vikram. Thank you.